While your savings account lost money to inflation, a 23-year-old college student made 25% returns buying sneakers. And that's not even the weirdest asset. I'm about to show you 5 unexpected investments that crushed inflation while traditional portfolios got destroyed, and the hard data will shock you. Look, the past 3 years have been brutal for anyone trying to save money. Inflation hit 9% in 2022, and even though it's cooled down some, it's still eating your money alive. Your financial advisor probably told you to buy those special inflation bonds called TIPS. Well, those safe investments lost over 6% from 2021 to 2024. Your savings account getting destroyed every month. But while everyone was panicking, there were these unconventional assets that nobody talks about that were quietly making people rich. And I'm talking about collectibles and specialty items you can literally buy on your phone right now. Here's what drives me crazy. Every time prices start going up, the money experts give you the same boring advice. Buy gold, buy real estate, buy boring investments that barely beat inflation. But what they never tell you about are these unique assets that actually crush inflation. Think of it like this. Imagine inflation is a fire that's burning your money every day. Most people try to protect their cash by putting it in a fireproof safe. But what if I told you there are certain investments that don't just survive the fire, they actually grow stronger because of it? That's what these 5 weird assets do. The problem is, most people only think about stocks and bonds when they hear the word investment. But during times when everything is getting more expensive, the unconventional assets often outperform traditional portfolios by massive margins. We're talking about collectibles sitting in your closet right now, limited edition items you can buy at retail stores, investments most people would laugh at if you called them serious financial assets. But here's the reality, and this is going to sound crazy. Some of these unconventional investments have better long-term returns than the S&P 500. And during the worst inflation spike in 40 years, they absolutely demolished traditional investment strategies. Let me start with something that sounds fancy but is actually pretty straightforward. Fine wine. Before you think this is just for wealthy collectors, check out what happened. There's this benchmark called the LiveX 1000 Index. Basically, it tracks the price of the most traded wines that investors buy and sell globally. In 2022, while your 401k was probably losing money, wine was up 24.6%. That's not a typo. While everyone was freaking out about inflation, wine investors were celebrating massive gains. But here's the cool part. You don't need to know anything about wine or store bottles in your basement. There are platforms now where you can buy fractional shares of wine collections just like buying Apple stock. Professional companies handle all the storage and selling. You just watch your investment appreciate. And this isn't some one-time lucky performance. For over 100 years, during periods when everything gets more expensive, wine has averaged 5% real returns above inflation. So if inflation is 8%, wine returns about 13%. It's like having a financial shield that actually generates wealth while protecting your purchasing power. Think about why this works. Wine is a tangible asset you can physically touch. People consume it, so there's less available over time, creating natural scarcity. And when wealthy individuals get worried about their money losing value, they don't stop buying expensive wine. They actually increase their purchases. Plus, winemakers literally can't produce more 1982 Bordeaux. That vintage is gone forever, making it irreplaceably scarce. Now get ready for this next one because it's going to blow your mind. Trading cards. Yeah, like Pokemon cards and baseball cards. The collectibles you probably have sitting in a box somewhere gathering dust. Over the past few years, trading cards have been generating 6% to 20% annual returns. But some individual cards have gone absolutely insane. There's this Pokemon card from 1998, the Pikachu Illustrator, that sold for over $5.2 million in 2022. 5 years ago, but you don't need million-dollar cards to profit here. Those Pokemon 25th Anniversary Classic Collection boxes that cost $20 at Target, they're selling for $100 now. Sports cards that people threw in the trash during the 1990s are worth thousands today. Even newer cards can double or triple in value within just a year or two if they feature the right players or characters. And here's the wild part. This market has become incredibly sophisticated. There are companies like Rally and Otis that let you buy fractional shares of expensive cards without actually owning the physical card. There are grading services like PSA and BGS that authenticate cards and rate their condition on precise scales. There are even investment funds that create diversified card portfolios. This isn't kids trading in their bedroom anymore. It's a legitimate asset class with institutional backing. The reason cards work so well during inflation is identical to wine. They're tangible assets with absolutely limited supply that can't be printed like paper money. Pokemon can't just decide to reprint a rare holographic Charizard from 1999. Once that print run ended, it's gone forever. But wait, there's more weirdness coming, and this one will make you want to raid your shoe closet immediately. Sneakers. Limited edition sneakers have been crushing traditional investments, and the performance data is undeniable. There's a platform called StockX that's basically like the New York Stock Exchange, but for shoes. They track live prices of the most popular sneakers, and during 2022 and 2023, their index significantly outperformed most traditional investment benchmarks. Some individual releases performed extraordinarily well. Those Travis Scott Jordan 1s that retailed for $175 when they dropped in 2019, they were selling for over $2,000 by 2023. That's more than 10 times returns in 4 years. The research data shows sneakers generating 13% to 25% annual returns recently, and it makes perfect economic sense when you analyze it. Nike can't just reproduce a sold-out limited edition from 5 years ago. When they're gone from retail, they're gone forever. And as everything gets more expensive due to inflation, rare sneakers become increasingly valuable as alternative stores of wealth. Plus, sneaker culture has exploded into a massive global phenomenon. Generation Z and younger millennials view limited sneakers as legitimate investments, not just footwear. There are entire communities on Reddit and Discord with hundreds of thousands of members dedicated to sneaker investing strategies and market analysis. And the accessibility is incredible. You can buy authenticated sneakers on your phone and have them delivered to your door within days. The entire authentication and transaction process is simpler than buying most traditional stocks. Now here's where the opportunities get really interesting, and this one most people never consider as an investment: those web addresses you type every day. Domain names have been generating 7% to 12% annual returns, and during recent inflation, this digital real estate market went crazy. Every business needs web presence. As more businesses launch online, demand for quality addresses grows exponentially. But there's only one Amazon.com. Premium domain supply is completely fixed. But there's only one Amazon.com. Premium domain supply is completely fixed. Luckily, you can start for almost nothing. Premium domains sell for millions. A premium domain is digital real estate that can't be inflated away. Unlike physical real estate, you don't need huge down payments or ongoing maintenance, just small annual renewal fees. Speaking of high-yield investments you might have overlooked, how about comic books? Vintage comics have been generating incredible returns for decades. Comics typically generate 6% to 10% annual returns, but certain key issues perform extraordinarily. Amazing Fantasy Mar 15 First Spider-Man sold for $3.6 million in 2022. You don't need million-dollar comics. Bronze Age comics from the 1970s that sold for $20 are now worth hundreds. Copper Age comics from the 1980s that nobody cared about are heating up dramatically. Comics work as inflation protection because they're tangible with absolutely limited supply. Marvel can't reprint an old issue with the same vintage paper and historical significance. Every Marvel movie drives interest in original source comics. Every Netflix superhero show does the same. Professional grading services authenticate comics on precise scales. Major auction houses run regular sales with transparent pricing. Here's an incredible story. A Michigan school janitor worked 30 years making around $35,000 annually. He loved comics as a kid and kept buying them for enjoyment. When he retired in 2020, his collection appraised at over $1.2 million. Comics he bought for $2 in the 1980s were worth $5,000 each. His hobby handily outperformed most professional stock portfolios. By now you might be saying, what about the tips, those treasury inflation-protected securities your advisor recommended? They lost over 6% during this period, but if you split investment capital equally between wine, cards, sneakers, domains, and comics, you would have outperformed traditional markets during the worst inflation period in 40 years. This isn't just about money. It's about understanding that value and wealth preservation is fundamentally changing. These assets represent tangible value that can't be manipulated by governments through monetary policy. You can't print vintage Pokemon cards. You can't create more first edition comics from 1962. These alternative markets are still tiny compared to traditional stocks and bonds. The entire global collectibles market represents a small fraction of stock market capitalization. There's massive room for growth as more people discover these opportunities. Think of the investment world as a shopping mall. Everyone shops at big department stores, stocks, and bonds. Most people shop there because it feels safe and familiar, but scattered throughout are tiny specialty shops hardly anyone notices. While everyone fights over the same merchandise in crowded department stores, these specialty shops quietly serve dedicated customers willing to pay premium prices for unique, irreplaceable items. That's exactly what's happening in investments. While millions fight over the same stocks and bonds, these alternative asset classes quietly generate superior returns for people who pay attention. Let me break this down one final time. While everyone else lost money to inflation from 2022 to 2024, These 5 unconventional assets often made people wealthy. Wine up 24.6% in 1 year. Cards generating 6 to 20% annually. Sneakers returning 13 to 25% yearly. Domains generating 7 to 12% returns. Comics delivering 6 to 10% long-term with individual issues exploding. The common thread is absolute scarcity. Tangible or limited digital assets with fixed supply that can't be inflated away. They're collectibles with genuine demand independent of government monetary policy. Nobody's suggesting you put life savings into Pokemon cards. That would be financial suicide. But completely ignoring these opportunities is equally foolish. Even allocating 5-10% of your portfolio to unconventional assets could dramatically improve inflation protection and boost overall returns. The performance data doesn't lie. While traditional advice was failing during one of the worst inflation periods in decades, these weird assets often crushed benchmarks. Most markets remain accessible to regular people with modest budgets. You don't need millions or insider connections, just different thinking about legitimate investment opportunities. What's changed is that infrastructure supporting these markets has become incredibly sophisticated and user-friendly. You used to need specialized knowledge and insider connections. Now there are apps, professional websites, authentication services, and fractional ownership platforms making these markets accessible to anyone with a smartphone. Research shows these investments often move independently from stocks and bonds, protecting and growing wealth when traditional markets struggle. During inflationary periods specifically, tangible collectibles and scarce assets have historically been among the very best performers. So next time someone tells you to just buy index funds, remember that while they're shopping in crowded department stores fighting over popular merchandise, you might want to explore those weird specialty shops. You might be genuinely surprised at the incredible opportunities you discover. Hit subscribe for more unconventional investments that actually work. Thanks for watching.